that we were waiting on about 2 or 3 weeks back was really Powell and whether or not they're going to taper off purchasing bonds, and that came out. That was basically background there was talking about inflation, how we can't necessarily stop inflation. We got to start going towards that point, which is fine and something that we expected. Um, Unfortunately, he didn't come out with necessarily a schedule on how they're going to taper down. So that's kind of where we're in the pause section. So bond market definitely decreased a little bit. Same with stocks, but then the job reports came out and it was fantastic. We beat a lot of the numbers that we were expecting. So bonds and stocks started going up. But the next big really date that we're looking at, I believe, is the 12th of November, and that's when the Fed is going to come out and say, here's how we're going to taper down. So we're going to get a lot more information on how much they're buying, how much they're tapering over the next month, and that's going to give us a lot more indication on where the market's going to go. So truly, until the 12th, we might see some volatility. I wouldn't necessarily lock today unless you got to close something this weekend or early next week. I'd probably float the rate until early next week, but I wouldn't wait until the 12th to make a decision, because I'm foreseeing, and a lot of people are forecasting, the market to go the other way with tapering actually coming forward.
What do you think the plan is going to be? So like, because I was hearing, what do you think?
It's hard to say. It really depends on how much they taper down. If it's like a quick approach, which truly with inflation we might need, then I think things are going to drop a little bit quicker. But it really depends on how much they want to taper, and that's just the unknown right now.
Mm-hmm. Yep. Well, that's
And
interesting. I mean,
I put a file in the chat, quick screenshot from our system, just kind of showing the bond market and rates, how things are looking. Yeah, I think it's going to be impacted. I think it's going to be very volatile, probably that week after the 14th. So truthfully, and again, we don't know, but I wouldn't be locking within that week after the announcement. But before that, and then maybe a week after that, when we see how things are actually going to go, the direction, then I'd start locking again. So do it within the next week is what I'm saying.
gotcha. So the 12th, yeah.
Mm-hmm.
In a week. Gotcha.
And then going into 2022, everything that I'm seeing from every system is saying rates are going to go up. So just to FYI there, investment rates are already trickling up. But ultimately, this is just a heads up so you guys can plan. Realistically, we're still at historic lows, even if we bump up to high threes for primary or even high fours for investment. It's still low. Just make sure to plan accordingly with your projects going forward.
Yep. That's some good tips. I'm guessing because we have a few projects that will be hitting the market. I'm just waiting for my permits, man. I'm guessing we'll hit market in Q1, maybe mid Q1. So I'm curious. My thoughts is like we probably need a quick them to make some drastic changes just to keep up with inflation numbers. But at the same time, if they taper and it's aggressive, then what is that going to do, right? To the economy, how slow is it? Are we going to slow down? So there's a lot of question marks, but I think time's ticking. They did say like 2022, 2023 is when we're going to start to they're going to have to bump rates, but yeah, we're getting there.
Agreed. This is not a situation of if,
interesting.
it's a win. It is a win. When is this going to happen?
Right. But I mean, again, like the housing market this time, it hasn't been like a major focal point. Right now, it's like the supply chains, logistics, and some shortages because of that. Did they fix? Does anybody know if they had the backlog, right, in like the LA docks with the supply chain, like with the ships coming in, the cargo? Did they resolve that, or is there still ships like sitting out there right now? Does anybody know?
End of last week, there's still ships there. If anyone knows something more recent, by all means, step in. But I haven't heard of any changes.
Yeah, so I mean, it's not real. I mean, the last Great Recession was directly, affecting like the housing market, but this is a little different. So I'm not quite sure either way, and if anybody has any opinions or thoughts on it, like I love that kind of stuff, because I always want to stay a step ahead, right? We want to be proactive rather than reactive. So if anybody has anything to share, their thoughts or anything, obviously there's no wrong answer because nobody knows. So no shame. But thanks, Matt. Thanks for sharing.
Absolutely.
To get some insight.
Just a little bit more insight, because I know we've been talking about the Evergrande scenario in China. They essentially paid their debts that were outstanding, but I don't know if they're going to be able to get out of this. On top of that, they're the second biggest developer in China. We're talking billions of dollars in projects. Not the top 5, but we're starting to see some other developmental groups in China come out and start running into the same scenario. I forget the name. I'll try to find the article, but there's another company very similar to Evergrande, much smaller, but going through the exact same thing, and it looks like they're about to default as well. So something's going on with China. That's obviously a huge market, and it's going to affect a lot of things going forward. So something to keep an eye out for.
Yeah, and it's so hard to it's almost like we have too much information now, too much news, right, and too much opinions. So it's kind of hard to filter out the noise, right? Because there's some screaming that it's going to affect the global economy, and then there's some saying that it's just it's going to disappear. It's not going to affect us here in the States. But when a company of that size, which has their reach, globally, and like how can it not, right, have some sort of trickle down effect? So because it's a lot of money that's being wiped out from them. So that one was an interesting one. I don't know, maybe I should be watching that a little more. Does anybody have any insights on that one? Oh, thanks for sharing that, Matt. Oh, I didn't read that one.
That's the second one I've seen. That one is not Evergrande, but Evergrande got out of their sticky situation they were in, but they're not hitting a home run yet. So I think we're gonna be running into seeing some more articles of Evergrande. But I noticed it because it's a second developer, so something's going on in the market. It's not isolated to Evergrande.
Yeah. Well, Arlene is saying, you don't know who is telling the truth too. That's true as well. And Blaze is mentioning the Zillow sell-off, which is a topic that I kind of wanted to talk about. Today's just kind of open forum again, traditional coffee talk style. So it's Keiko's birthday today. So actually, yeah, I was gonna send him a text of all of us in here as we're going along, telling him happy birthday. So, but he's with the family. If you guys have any insights on maybe what you think the Federal Reserve's going to do and how we're going to kind of fix the imbalance that we have going on, then please send in the chat, because I love following that right now, because it's such interesting times. I feel we're part of history right now. So that's just for personal sake. But why don't we jump right into our leads, needs, and good deeds? Does anybody have anything that they have going on, any deals under contract they need funding for, any funds to deploy into deals? And we see we have Kate on. Hi, Kate. Thank you for sharing last week. Sorry, I was trying to get in and on the call, but I missed you. But I heard
you were just hopping onto a plane, weren't you?
Yeah, I was trying to come back to the islands, but yeah. Thank you again for coming on, and thanks for coming on this week.
No problem. I didn't know if Kiko would be here or not. I wanted to wish him a happy birthday. I've been texting with him a little bit, but we'll have to screenshot it and send it to
Yeah,
him.
that's what I'm gonna do. I'm gonna take a selfie of
I
all of us.
I also have, I guess, for anyone who was on last week, I'm closing the house that I purchased today. So I can't stay for too long because I'm going to get the keys right now. So first project from my new move, I moved across the country and have a new possible short-term / long-term rental in the books. So that's my good news for today.
Nice, congratulations, Kate.
Thank you.
Yeah, and if anybody missed last week's call, it should be up soon if it's not up already. It's already up. Okay, it's on our YouTube page. So go check it out. Thanks, Kate.
Thank you. I hope to make these all the time because I find this stuff so interesting. I'm in Canada, but obviously the markets still kind of parallel each other. So I'm hoping to be in these chats from here on out.
Yeah, that's awesome. Actually, in Canada, like what's going on in the Canada housing market over there? Like, is it kind of similar to US?
It very much so is. We've got a little bit more of a fail-safe, I think, in place with our mortgages and lending. They keep implementing almost like a stress test in your lending. So it's been a little bit more difficult, especially moving into an even hotter market than I was in, which I didn't think was possible moving from Toronto. But on the West Coast here on Vancouver Island, it's pretty much the same. Houses are going in hours for hundreds of thousands of dollars over asking. They're trying to implement some kind of legislation to cool down the market where they're trying to figure out how they can allow the buyer to have some kind of whether it's like a clause in their contract to not have to go through with the deal if they feel like they're under too much pressure, which to me seems like it would just be an absolute mess. But there are things kind of trickling through the news networks where the government's definitely trying to slow things down a little bit because it's crazy.
Yeah. Oh, wow. So it is kind of similar to the US. So I'm assuming that you in Canada still kind of stay tuned to like the news that the Federal Reserve is doing, right? Absolutely, right?
Yeah, everything affects, like we are living in a global market. Everything affects everything. Even when I heard about Zillow and the Evergrande, any news that comes through, that's why I like these talks. I like to kind of keep my ear to the ground, and I'm not the one to always do the best research because there's just too much going on, but I love coming on here and hearing what Matt and people that we have been speakers and have been kind of giving their 2 cents have to say about the market, whether I'm in Canada or not.
Right. Yeah, absolutely. And when did you get into real estate, Kate?
Probably about 10 years ago.
Like 2011?
Yeah.
Okay, that's about the same time as me then. So like we kind of came in on the bottom on the way up, right?
Yeah.
Like that's why like I'm always, I think it piques my interest because through my journey too, right? I've learned so much, made a lot of mistakes, survived to, I guess, to be here today. But with that, it's like, it's kind of been good times, so, right?
It has.
It's been hard to lose. But when you're playing against the market now, that's something that I've never experienced, even in my career. This is the longest bull run ever, right?
I know. And then there was a question from Mitch about with the higher prices now, what return am I predicting? And I've kind of had to change my game plan. We talked about it a little bit last night, where I'm a home flipper here in Canada, but because it's such a hot market, you're getting into bidding wars. Things are way overpriced. So I'm playing the slow game where I'm targeting houses that have sat on the market for a couple months. Maybe they were mispriced. And I'm hoping to find whether it's a combination short-term, long-term rental and keep the house, with the potential that if it also didn't work out with the budget at the end, that there's still room to flip it and do all right. But my game plan is shifting a little bit with how hot the market is. And there's some pretty good, especially in this area, because it's a very touristy area, there's some pretty good short-term rental potential as well. So again, like finding a house with a beautiful view that has a suite in the lower level and a beautiful 3 or 4 bedroom that needs a lot of work because I'm a contractor as well. So I fix it up, refinance, pull the money out, and hopefully get some short-term rentals in the top. So changing my strategy, definitely, and not being as aggressive, letting things pass by, because it is kind of scary. I think for everyone, it's scary for me.
Yeah.
And I don't really, I've made some mistakes in the past, so I don't really want to do that again.
Right. Yeah. Yeah. And let's see, I was meeting with Jovan, who usually comes on our calls yesterday, and he asked me like,
I'm here.
Like, what do you, have you guys grown through COVID, or you know, what has this time done for us? And I've definitely grown, I think, myself, just personally. And that's one of the lessons I think I've learned is that it's okay, like, because I was so certain that the housing market would take a turn. You know, I was like, how could it not? All the fundamentals are pointing towards, you know, us like losing traction, the market slowing down, and price corrections. But I couldn't have been more wrong, you know. So, and a lot of it was because, yeah, the Fed stepped in, and you know, they kind of helped out there. Then just looking at supply and demand, I didn't think that the market would turn the opposite direction when I thought we were going to go. So one thing I've learned through that is that no matter how right you think you are, you should still kind of keep it open to the fact that you could be wrong, you know, because if we made drastic decisions, then we probably would have, you know, missed out and shot ourselves in the foot. But after, you know, it's hard to stay disciplined during questionable and volatile times. But right now it seems times are really good. But I think the investors who survive any type of big turn or big correction are the ones that, even though the times are good, you're still trying to look ahead, right? And focusing on, or that's why we do SWOT analysis every quarter, right? To kind of stay ahead of it. And that's something that I want to lead into with the Zillow thing. And I know you have to get going, Kate, but if you are still on, I'd love to get your opinion too on the Zillow fiasco. Yeah. So. But thanks again.
It was nice to see you, Corey. I didn't want to take up too much of this.
No.
Great
yeah, thank you. Have
Kate. A great day, guys.
And so does anybody have any leads, needs, or good deeds?
I had a question, bro.
Kyone.
What's up, brother? I wanted to get some insight on, I'm open to hearing from people, and I guess I'm coming from a tax side, what advice they're getting for those who actually pay out, I guess, what is that, like finder's fees or bird dog fees? What is the tax advice people are saying? And I've done this in the past, and I'm just curious to see what people are doing as far as if they're not paying true cash out to people who are bringing them leads and it actually closes, and they're writing a check or a cashier's check or whatever. What are you guys putting in that memo section? What are your CPAs advising you guys to do, especially if you're labeled as a real estate professional? I'm curious to hear what insights anybody might have on that.
That's actually a good question. How big is the fee? Is it like over 500?
Yes, definitely. Always over. It's not like I haven't been. I'm just curious now. Like, is there anything? What else is? What are other people doing? I've never asked. I know I've been told that you shouldn't put finder's fee. You shouldn't put a referral fee. So I was like, okay, what is the correct? And what is anybody has insight on that? So that's kind of where my question has always been stemming. So just wanted to throw it out to the group.
Yeah.
You 1099ing the person, Keone, right now? Are you 1099ing the person that you're giving out finder's fees to? Keone. No, you're muted.
You're muted.
as a call. I am not 1099ing them. Should I be?
I'm
Yes.
not a tax person. I would just assume that you should for sure, because I 1099 like our stagers, photographers, anything, any expense that I have on a listing, we get their information up front and just give them a heads up that we're going to 1099. So yeah, get their information, EIN or social. And there's a
So
form
this
you
is-
can send them.
I do
I think he's
everybody.
asking.
Everybody that you said, I do. I do 1099. Everybody else, except for the people who are like just off the street saying like, yo, and I saw a house, and then I ended up digging into it, and then I basically tell them that, yeah, if it closes, I'll pay you a fee, but I don't tell them that I'm gonna 1099 you. You know, so like I'm just paying them either cash, but normally I don't. I track it, so I'm writing something.
If you don't 1099 them legally, you can't deduct it from your taxes. So it's basically like you went to the grocery store. So like that's the legal CPA. I'm not, disclaimer, I'm not a CPA, but like that's the legal. That's the legal, like what your CPA would tell you, you know. And so like if you're not gonna, if you claim it, it's basically like if in the rare chance you ever to get audited, then you just have to say like, okay, let's just take this off the books or whatever kind of thing, you know, even though it's like a legitimate expense because they didn't claim it on their taxes. You don't want to have to cause trouble to them on whether they're filing or not filing, right?
So I guess let me ask, would you guys 1099 somebody who was actually bringing in a lead for you?
I would ask them, say like, do you want a 1099 or not? I usually give them the choice and so like it depends on how the size, if you want to take the deduction, basically they're going to pay the taxes or you're going to pay the taxes, right? So if you do it legally. So it's either if you 1099, you can take the deduction, you don't pay taxes on that money. If you don't claim it, then now you're paying tax on it because you're paying them with after tax dollars. So it's just a matter of what you feel comfortable with. So then if you do everything by the books, it's just like a little bit more expensive for you. You're not giving them $1,000, you're giving them like $1,300 realistically because it's after taxes, right? So
yeah. And so my fees would be over 1,000, definitely. So if I do 1099 and not to take up all the time, what would be we writing? So now that basically I'm 1099 them legally, is there something that should be documented in the memo section if you are cutting a check?
I think you could use like a marketing designation.
Marketing, consulting. I don't know.
Yeah, marketing, consulting.
It does matter though, because it's kind of a different situation. But one thing that I've learned is when sometimes when we close a deal, if the deal can support it, we'll pay ourselves a little bit on the front end, right? And so that I used to call it an acquisition fee, and pay ourselves after closing when we buy it. But my CPA was saying that don't call it an acquisition fee because then you pay self-employment tax on it. Call it an acquisition advance. Basically, it's an advance on the net profits of the project, right? So and then you pay that when the project is sold. And who knows, maybe if you break even or if you lose money on the project, then you don't want to have to pay taxes. That wouldn't have been profit. That's kind of part of the loss, you know. So you took a loss on the project. So, you know, there is a chance you may not have to pay taxes on it at all, which would actually not be too good, right? Because that means you didn't make money on the deal. But at least if you paid yourself up front and you called it an acquisition fee, you'd have to pay self-employment tax on it, and which is an additional 15% in Hawaii. So the verbiage does matter. So you're right to think that way. But for that situation, I'm not too sure if it.
For you, Corey, you're taking. For you, Corey, it's because it's whether or not you're taking income, right? So because like when you take income, that's like a difference between when it really matters what type of income it is, because there's different kind of taxes. But if it's a deduction, basically all deductions are relatively like, it just cuts off your profit, I think. So I mean, like Layla was saying, whether you just call it marketing or you can call it a contractor or whatever it is, it's basically you're just paying for labor or consulting services, I think. In Keone's case, I mean, your case is like special. You guys are doing some like advanced like stuff on the marketing side, though, I think. So
I was gonna say that I'm of the same mindset, and I was advised the same way what Layla just said. Like, it's on the marketing side, like especially if you got to document something in the memo for tracking purposes. That's what I've been doing, using terms like that, and nothing with fee. Don't use fee anything. So
I don't know.
I was just curious.
Yeah.
If your bird dog was really adamant about not being 1099, you could also present the cash price or the taxable price, right? Like, okay, well, I could pay you a little bit less if you don't want me to have to get the write-off, because I'm going to have to be paying the taxes. But I mean, that's a conversation that you have to kind of feel out.
I didn't look at it that way. I just felt kind of weird, like, like, thanks for bringing me the lead. By the way, I got a 1099 you.
Right. Yeah.
Well, they might want the income because that might be a job source for them. However, Arlene brought up a good point too, as licensees, for any of us licensed ones, we might be held at a different standard. So that's actually a really good question to ask a CPA or an attorney.
Which is why that's why I brought it up, because I am that as well. I had this conversation, so I was like, and I told him that, like, real estate professionals said, you're still licensed though, right? So there's this balance. She said, do not use fee. It will come back to you. Do not use anything type of fee. And then it was like more on the marketing side, like all of these terms. So I'm like, okay, I'm just curious. So just wanted to throw it out to the community. All of these are definitely helpful.
Yeah, it's definitely topics. It's not like the sexy topics, right? But like it's the important topics. Yeah, because at the end of the day, like, you want us to be able to survive, any issues that may arise, like, even if it's people like this, or maybe it's the IRS, I don't know.
Thanks, guys.
Thanks, Keone.
Nice.
Hey, Matt. Sorry, you just went muted again.
All right, I think I'm unmuted now. So speaking of CPAs and I'm relatively new to the islands, and I was curious, if anybody's had really good success, finding a local real estate attorney or CPA here. I'm on Oahu, but I imagine anyone local to any of the islands, would probably be very helpful.
Yeah, we have a lot of people who gave referrals. In fact, Daniel just referred me to his CPA, so maybe we can send his info over to you too. As for attorneys, it kind of depends. Like, what are you looking for? Like, if you're dealing with something right now and it's pretty heavy, you need like the heavy artillery. We can send you the guys we use. If it's just stuff, I can send you someone else.
Yeah, I was just looking to start up an LLC, talk to a CPA to determine, for tax advantages, would be the best type of LLC to set up. And then, finding an attorney, to put, agreements in place that you'll have with contractors, and just setting up the LLC correctly.
Yep. Well, Mitch, welcome to the island.
Yes.
You just moved?
Well, I've been on the water for about 2 years, but I'm just trying to get into real estate. I came from San Francisco Bay Area, and I rehabbed 2 houses that I lived in. Did pretty well, and I was interested in getting into construction project management or project administration out here. But ultimately, I've always wanted to get into kind of more fix and flipping type of business. So I met Aiden on Bigger Pockets, and so we've been talking. So thanks, Aiden. Awesome. Thanks for introducing me to the group.
Nice. Well, yeah, Mitch, I can help you out with both sides when it comes to attorneys, and then the CPA. I actually think Daniel's guy, and Daniel, thank you for that's one of the good deeds, I guess, like, for referring me to your guy, Gordon. Gordon Gates is his name. And I spoke with him. He's it sounds like the guy that you need, Mitch. So
okay.
I'll get your contact maybe through Aiden, and then I'll help you out with those.
Awesome. Much appreciated.
Yeah. Thanks for hopping on, man.
Definitely.
All right, guys. This is there anything else? Did anybody else have anything?
Hey, Corey, I got something.
Hey, Zaylin.
Hey, what's up, man? So me and my business partner, Warren, we just locked up 2 deals last night. And I just want to give a shout out to Aiden for helping me fill out your guys' application to get funding.
Oh, yeah. I saw it come through, man. Yeah, right on. Right on, Aiden.
You guys. You guys are
Play
killing
of the day.
Well, yeah, Zaylin, congratulations, man. I think I only saw one come through. Did you just get another one under contract?
There's 2 in.
Oh,
yes.
2 in.
Yeah.
Okay. Rocking and rolling. So are you looking for
Yeah.
gap funding or are you guys all set up already?
So, yeah, so we have some private money investors that we reached out to, and we got some commitments. We just got to work out the terms with them now.
Nice. Okay. Well, reach out to us if you need help with anything, man. We're rooting
Yeah,
for
we'll
you.
do. Thank you. Thank you.
Yeah. And thanks for coming to us.
Yeah. I wanted to support local, you guys are the biggest hard money lenders in Hawaii. I figured, build that relationship with you guys.
Thanks, man. Well, the team is very grateful. And that's funny you said that. I'm not supposed to say a lot because I don't know why, but I can only sprinkle. So, but we've been kind of working really hard the last few months to bring some money back to Hawaii to deploy for local deals here. So just stay tuned. I guess that's all I can say before I get in trouble.
Awesome.
But I mean, there should be some news coming soon, guys. So it'll benefit all of us, I promise. So stay tuned on that. But all right, if anybody doesn't have anything else, why don't we jump into the discussion of the day, which I kind of wanted to talk about, which I think, everybody was kind of watching and following the news. When I did my SWOT analysis, probably around second quarter is when I started to put in, maybe first quarter of this year. Under one of my threats was the iBuyers program with Zillow. So just because they were buying at such a high velocity that it did kind of raise some flags like, okay, this could be a problem, right? If they come into a certain market and just start buying houses. But with the recent news, as kind of we all may know, is that they're kind of bailing on that. And they stand to lose a lot of money from that decision to go into the house flipping business. From what I've saw is that they were, I guess, betting on their ability to predict prices value 6 months ahead in the future, right? Which is very, I guess, ambitious to think that you can predict the market 6 months in advance, even with all of the data that they have, right? So they're like the data kings, and data is gold nowadays. So I just wanted to get people's thoughts on the situation and see if there's going to be opportunity somewhere in there. Anybody have any thoughts? I know there's some realtors on the line too, so they must be pretty happy. One thing is,
I didn't think the iBuyer program, at least in our market, really affected us at all. I know that they were pretty heavy in like a certain few areas. And honestly, 7,000 houses, it's a lot of houses to take from the community and from the people. Don't get me wrong, I don't know what the impact of that will be when it's unloaded. And, I think they're going to package them up and sell them to, BlackRock and some other big companies. So what they'll do with those, obviously probably introduce them into the rental market, maybe package those up to some other companies and sell them. I don't know where those will land long-term, but I am grateful that it's not going to be the monster that just kept on pushing forward, which I always thought was going to be a real challenge anyways, just because, data is important, analytics is important, and their algorithms is, valuable. But at the end of the day, house flipping, as you always like to say, is not very scalable. It's just really hard to run into all of the unknowns of permitting and what's under the ground and tree roots and these are not small numbers that they can put an algorithm for, because they can be a $30,000 fix on a $90,000 house. So I am happy for the house flippers as far as like flooding the market or, you know, changing the price points or anything. I don't think it's going to impact us as much as maybe people fear. And I think they're only pretty heavy in like 5 states.
Right.
Just my thoughts.
Yeah, I agree. I mean, it doesn't really necessarily affect us, but it could be, since Zillow is kind of like, they're a market mover, right? So if it worked in the markets that they're seeing it work, who's to say they won't expand like nationwide, right? So it kind of was a little bit of a concern or something to watch, because if you have the ability to buy like 7,000 houses in one area, I mean, in some areas you might own the whole town if you do that, you know, and them controlling that much real estate. I know it's scattered throughout a few states, right? But one thing is, when I started hearing about the program, I was wondering what their exit strategy was, because Blackstone and a bunch of other large private equity groups did this back in like 2014 or 15, I think. They went in and scooped up a bunch of single family homes, which that was the first time that Blackstone has been in the single family real estate business, I think, either ever or definitely the first time at that scale. So they bought, and then I think they just held and property managed it and then sold it maybe a few years later for a massive profit. So I thought maybe that was the play for them. But come to find out, like a little later, as I was digging in, is that their plan is to flip the houses. And when I heard them say flip the houses, that means they're getting teams of contractors in there and having to do all the logistics and ordering for these houses to get them to market to sell them within a few months. That's a different story, you know. And because like I said, like, you know, if you meet a builder, right, who has decades of experience building houses, it doesn't mean that that builder can flip a house. You know, flipping houses is different. It kind of becomes an art, because no project, I mean, to date, I don't think we've had a project where it's gone according to plan all the way through. There's always something that happens, whether it's on the financing side, whether it's on the operational side. So it's hard. When I heard that, my initial thoughts was, how are they going to manage that? How do they manage thousands of projects, fix and flip renovation projects in a short time frame because they want to flip it, you know? So I was thinking, man, if they can do this, then that's huge. Like, you know, they can, obviously somebody can figure out how to scale that wide in this industry, in the house flipping industry. But it turns out, yeah, they just actually were trying to predict the market, and they have no experience in flipping houses, really, right? So I think that came to light. And I think the CEO, even though he kind of danced around the question a little bit, that's basically what he was saying, is that we made a mistake. We couldn't execute. And then he also blamed COVID a little bit about, you know, cost of materials going up and stuff. But I've always said, like, flipping houses is a very hard operation to scale. It's not impossible, but it's very hard to do it in a matter of to scale, especially at that size. So I don't know if there's opportunity there. I think it's more relief that, you know, for realtors, for investors, especially in the areas that they were buying, that, okay, they tried it, they did not, you know, it was a massive fail. They had to, I think, cut 25% of their job force, which means that was a big loss. You know, that was a big mistake that they made. So does anybody have any opinions on that? That was a hot topic, maybe like a week or last week, a little bit old news. Oh, maybe it was this week that we were talking about it. Let me get caught up in the chat. Aiden said, this is what happens when you use the Zestimate to run your numbers.
I think outside of just their iBuying program too, from the realtor's perspective, it's kind of, I don't know, everyone put so much credit and weight into this massive company, Zillow, and everyone was getting all of their comps off of Zillow and their pricing off of Zillow. And now just, you know, as a realtor, when we're doing listing presentations or talking to people about their valuations, this overall just kind of brings people back into a level-headed space where they trust that realtors' position and our value in this housing market, it cannot be just completely automated. And so I think it just positions us in a really good place too. And then just also being an investor realtor as well, just makes hopefully more apparent how valuable, you know, your team is in all of this. Because I know some people in the mainland, not this market, but some people on the mainland were trying to automate their whole house flipping industry and business as well, trying to follow suit to Zillow. So back to Stone Ages, good old fashioned boots on the ground, creating a good team, relationships. And real estate really is relationships.
Yeah, and that's exactly kind of what I was trying to get to too, is that when it not only is this just a fail on the strategy, but it kind of shows and brings to light, I think, like the necessity of having, you know, an agent or someone representing you directly rather than a large conglomerate, right? Who's not really maybe vested. I don't know how their selling force does it. Is it just kind of, you're just another number and you're getting a discount, or does anybody know? Has anybody used a Zillow or a Redfin agent before?
I think they might have different tiers, because Redfin was always, and Jasmine might know this a little bit more than me because I don't really pay attention too much, but I think at first they were discount agents that got paid hourly salary. So that was the model that they originally worked off of. And I think they realized that model didn't necessarily work for everyone, just because what's the incentive for an agent to, you know, work, you know, hard if they're just getting paid any hourly position.
So it's like a base salary, and then they're doing a commission spread on top of that. So they're guaranteeing their agents, I think it's right around $50,000 to $60,000 a year. And they're also paying their associates the same. So listing agents and buyer's agents are separate. And then you get a credit when you use a buyer's agent of like $5,000, which is something.
Yeah, it's something. Well, I just think that salaries in a sales position is just a bad idea. Like, I don't think, you know, like a performance-based job, like salary, I think salary kills the soul, you know, it kills motivation sometimes. So, but I get it. People need a base to survive, right?
It creates comfort, and comfort is.
But comfort, yeah.
Comfort can be
default
really
to
good
comfort.
for people.
It separates entrepreneurs from employees. And that's how I look at Redfin. You're looking at somebody who's going to do everything they can to get a sale done, which is an entrepreneur, versus a salesperson that's going to put it through an automation. And that's what Redfin does. They literally plug and play. If you don't fit into their plug and play, your product isn't going to work. So,
which I don't think is either model is bad. I think it just comes down to there's something for everyone, and it's another platform for the consumer and the agent, which is good. But for the house flippers, I'm just interested to hear if people are excited, if there is anyone on here in those markets. I think Texas, where was it else? Were they heavily into Carolina? No.
Yeah, somebody, I think it was Jerry. I don't know if Jerry's on today, but he was mentioning that the Zillow bought like a bunch of houses in this, I think it's a city or town called Katy, Texas, or something, where the market has been appreciating and they're buying a bunch of houses. So I think Texas, they had a big presence. Does anybody have is anybody in markets that are like kind of had to compete against those guys? It sounded like a good portion of the portfolio is being listed less than what they bought it for, that's not just a small mistake, like that's a massive mistake. I mean, there's not many of us even on this call who have ever done that. You bought it or you're selling it for less than what you bought it for. That's kind of hard to do. But
I have another question, a little unrelated. Does anyone have any predictions or thoughts about the vaccine mandate affecting the workforce come January and what that might do to the housing market in the first or second quarter next year?
what is the percentage of people who are still unvaccinated nationally and locally in Hawaii or your local states? Because that's actually a good point. Like what's going to happen, to the job force? I'm gonna like that. The jobs numbers were looking pretty better than expected, like Matt said early on, but that could play a role.
That's a good question too, because the workforce, those numbers, and then I think some states have 50%, some states have up to 70% vaccination rate, and so there's a lot of states that still have a low vaccination rate. So come January 4th, any of the companies with 100 more employees, which is a huge, sector, I wonder if that will, and they're not supposed to get unemployment technically, I think. I could be mistaken. So what would that do to the workforce, trickle down to the housing? And is that going to create a questionable 2022? How long will this last?
That's the question, right? That's I'd never thought of that. Because there's still a pretty decent size amount of, I think, of the population that aren't vaccinated, that are part of the workforce, right? Like, and what happens when they're forced,
I have a small comment on that. Before we get to that, you asked a question about the Zillow thing. I'm in the St. Louis market. I live in Hawaii, but I'm in the St. Louis market. I don't know if Zillow has bought any houses there. I haven't seen anything crazy there, but the conversation, the mastermind, I'm in St. Louis, it's more around Blackstone. There's another company that's in that area buying up single family homes. But most people use Zillow to list and sell retail, and most real estate investors who flip don't buy retail.
Exactly.
So that's my comment on that. But for the vaccine,
that's the first mistake, right? And that's the biggest mistake. That's like the number one fundamental in what we do, no matter what strategy you buy right.
Yeah. So we use Zillow for this estimate just as the initial offer with the contingencies, and then we get comps on the back end to make sure we should actually purchase the property from a realtor. I'm an attorney, not a real estate, not a realtor. So, but with regard to the vaccine mandate and the 100 person count, I have people who don't want to get vaccinated as potential clients to form their LLCs and their companies, leaving the companies at 100 or more that are required to mandate to form their own company to basically get that same business, but through their own company where it's only 1 or 2 or 5 employees. So employees are leaving their employer to form their own companies to provide the same services. To get around the mandate. So I think that was pretty interesting. I've had at least 3 people call me for that.
Okay, wait.
If that's a wave, that would be a really good opportunity, pivot for people, kind of like with COVID, how they started working for themselves or selling things. Etsy, homemade stuff kind of boomed. So that might create another pivot of a lot of small entrepreneurs.
Yeah, I've had two healthcare professionals call me to leave their employer to form their own company so they don't have to get the vaccine. And I've had 1 government contractor.
So, but what do they do so now they're a contractor?
They'd be an independent contractor rather than an employee.
With the same job though.
With the same job.
That's interesting.
So they're just starting to try these workarounds to see if they work. I think it's going to be a blanket statement of, okay, now everyone has to get vaccinated at some point. It's just, that's where it's trending. So they can work around as much as they want, but it's likely that the government's going to start mandatory vaccine for everyone.
I don't know how I feel about that.
I don't like it either. It should be a choice, but that's where it's going. My kids are in elementary school, and I'm pretty sure they're going to mandate to go to school pretty soon.
Yeah.
And it's not just going to be 1 or 2 or 3 or 4. We are already heading towards if you check Paris Agreement and what it's being set by the big banks, the elite, and the insurance companies. Very interesting how this climate agreement is just a cover up for the operations that are taking place behind the scenes.
Yeah, I mean, who knows? I think it's something to keep eyes on for us, right? Moving forward. That is a good point. Never seen I never thought about that, but that's an interesting thing that your clients are doing, Tim. But doesn't it come to a point where like if you get audited or something, that they'll be like, that person it comes here every day, they're an employee or something, and deem it that way?
Well, they're opening their own business. So they're leaving their large employer to open their own business.
But even if they operate as a contractor in that business, at some point, if you get audited, wouldn't they kind of just
they're not contracting to the employer. They're opening their own business and starting a whole new business, getting their own clients. So they're not an IC for the employer that they just left.
And that's enough to hold it over?
Because they're forming their own company, and they're basically leaving their employer to form their own company, just like how people
They're no longer
in construction, they're not an employee. They leave their employer to form their own business.
I always thought that, like, even though you're operating under your own entity as a contractor, like if you have an office in that space, if you're being compensated for travel and different things, like they'll still consider you employee, no? This is actually good news for me.
They might be getting their own clientele base or taking some of their clients with them, but they're not affiliated with that previous large company anymore, I'm assuming.
And employment really centers around the taxes. So who's paying the payroll tax or the self-employment tax? That's really what the IRS looks at when they're determining if you're an employee or not. And I would think the same thing would go for this vaccine mandate. If you are an employee classified as an employee and your employer is paying all these taxes and benefits, you have to fall under that law. But if you're not, and they just give you that check and you pay all your own taxes and everything, then that's what you're your own entity. That's how I think it would go. Who knows what's going to happen?
Right. Yeah. And Tim, was Zillow buying a lot in St. Louis?
I don't know. The conversations I've had in my mastermind in St. Louis, no one talks about Zillow buying houses. We talked about them basically folding, and that may be affecting the estimates, but they talked more about other private equity groups buying up houses and planning to do flips.
I think like Blackstone is looking at buying their portfolio, or someone is. Yeah. Okay. Well, sorry, I'm behind on the chat here. If you guys have anything, any insight on that, or on the Zillow fallout, other than a little bit of joy. It's a little bit of relief to our space, because whenever a large entity kind of controls a lot of the market and has that power and kind of forces their weight around in the market, it causes disruption, right? And something to keep eyes on. But Dante, how's it, bro?
Hey, good. For the Zillow part, what you guys talking about, if you're in the mainland, it's a buying opportunity for you folks, because it's an advantage, right? As a realtor, you already know that the seller is willing to take a loss, so you can actually take advantage right now, because Zillow shows that I've been looking in the mainland market, that's why. And it shows that, it's a Zillow-owned property, and it shows how much they bought it for. So you can actually either offer for how much they paid for it or less, because you already know that they're willing to take a loss. So it's actually a buying opportunity if you're a buyer.
Yep. Yeah, it's totally out there that they are going to take a loss. It's just how much of a loss. What do you know what markets they're in?
I've been only looking in Georgia, so I know they're in Georgia, and they're dropping their prices already.
Okay, Georgia, Texas, there's a few states, but how would you even go about buying some of their houses on their platform?
No, yeah, you just call them, contact them, and then you know, you can buy it off of them.
Wow, okay. I didn't know that. Yeah, I wonder how much of a loss they're gonna take on that.
That's a good thing. You never know. You just like negotiations, so start off very low and then see how much they would take.
Well, they have a lot of properties to move, so they gotta hurry up, because the longer it sits too, right, the more costly it is.
Yeah.
So yeah, that's a good point.
Yeah, I'm watching it right now. If they sit on it till January, I'll probably pick up one or two.
Where in Georgia? Is it like kind of more? Is it like Atlanta area, or?
It's spread out, and then it's in pretty good counties too. Like one of them I'm looking at is in Kennesaw, so Kennesaw is a pretty good area.
Okay. Well, yeah. Keep eyes on that, guys. But it's a big lesson. It's like there's 3 types of appreciation, right? There's instant appreciation, forced appreciation, and market appreciation. And the most important one is instant appreciation, which perhaps they thought they were getting when they bought, but I think perhaps they're relying too much on force and market. Well, actually, they're relying heavily on market appreciation, right? They're trying to predict the market 6 months out, which we never do. As savvy, disciplined, professionally trained real estate investors, we never buy off of market appreciation. And that's a prime example of why. Even you can have all the data in the world like these guys do, and if you're buying off of market appreciation, like you're bound to have, like, this is bound to happen. So it's just a very good reminder, at the very least, for all of us, right? All right, guys. I know that we should be having a guest next week. Oh, thank you, Aiden. Aiden put in the cities that Zillow's in. Everybody go out there and try shopping spree. But next week we're gonna have a guest on, and Kiko will be back. If you guys have a chance, go wish Kiko a happy birthday. He loves that. And but I'm gonna hang out for a few more minutes after the call to talk story. But other than that, everybody have a great week. Hit us up if you need any help. And Mitch, I'll get you some of the contacts, the referrals to help you out, brother. And otherwise, we'll see you guys next week. Have a great weekend and happy Aloha Friday, everybody.